Dave Barlow here with the gang from Sell for 1% Realtors. And we have Rich Ciccone. And Rich, I was talking to an Italian yesterday, and correct me if I'm wrong, it's Rich Ciccone.
Ciccone.
Is that right?
No, Dave, it should be, because you have to pronounce every vowel. That last vowel, you missed it. So it would be, you are correct. The C before the E is always a CH sound. So it's Ciccone.
Okay.
You have to get that A at the end.
I didn't throw the A on there. I was just Rich Ciccone. All right. So Rich
But
Ciccone.
I answer to anything. That's the good thing.
So, okay. Well, anyways, we got you here this morning, and thank you for taking some time. And we want to talk about what happened yesterday late afternoon with Chairman Powell and the Federal Reserve. They raised the index rate 0.25, which I think was kind of in line with what everybody was expecting. But then as he was talking, the stock market started dumping. And then as he kind of finished up, the stock market rebounded a little bit. So can you tell us what happened yesterday with all the action?
Yeah, Dave. So as I've said before in previous meetings we've had, it's not as much what the Fed does in terms of raising or lowering rates per se, as long as they stay within the boundaries of what the markets expect. But what the markets really are watching is the comments that the chairman says after the meeting. He indicated, in answering some questions from reporters that we may be coming to the end of the cycle of raising rates aggressively like he's been doing. He didn't really get to the point where he thought rates were going to be lowered sometime in 2023, but he did signal the idea that we're coming to the end of the rate tightening cycle. As you said, first of all, they only raised a quarter, as opposed to in previous meetings, they've been raising half and 3/4. So we're down to a quarter raise instead of a half or 3/4, which is a signal in and of itself. And then one question in particular was, he was asked about the Fed funds rate. The Fed fund rates currently is in the 4.5 to 4.75 range. And somebody asked him about that Fed fund rate and what he thought would be the future of that. And he said he didn't see that going above 5%. So what that means is that, if that's the case, then there can't be too many more increases in the future if he's going to keep it at under 5, and we're already at 4.5 to 4.75 right now. So that was a clear signal that, that the intention is to stop raising rates as the year wears on. So just the very fact that the rate hikes are going to cease is enough, even though they're not going to lower rates, is enough to telegraph the market that rates will stabilize in the future, and there may come a time when they will start to lower rates as well.
All right, well, that's good news for the overall market. Mortgage rates, stock market reacted. I'm a crypto guy, and I was watching Bitcoin go up as the conversation was going along, and so that's good news for the market overall, wouldn't you say?
Yeah, I mean, the stock market jumped. The mortgage-backed securities rallied. The mortgage-backed securities are what the mortgage rates are pegged to, and so we had a good day yesterday, no question about it. And it's a good signal for the markets and the housing market going into the summer that we hopefully will see rates continue to slide down a little bit. We hope to get into the 5s and stay there at least over the rest of the summer.
All right, Rich, I appreciate your time. Thanks for the clarification of what was going on in the market yesterday. I know all of us realtors are always very interested in what's happening as it impacts interest rates to a certain extent, and your clarification definitely helps us all. Thanks again for your time.
You're welcome, Dave. Thank you for having me.